Hello and welcome to the market update for Tuesday, April the 27th. By the way, the trading I'm going to do at the end of the update is going to be on using the ST trend as an entry technique. If you haven't used or looked at the ST trend, it stands for short-term trend. It's a little bit of a quicker signal to enter, so we're going to use it with ABC patterns as well. And if you're not too familiar with ABC patterns, you might want to go back and review that class I did on ABC patterns a few months ago. But that'll be the training that we'll do at the end of the update. Now, as far as the market, we've had kind of a wild whipsawing market last week. I'll talk more about that here in a second when we look at the chart. Let's take a look at some of the market indicators here. The direction alerts, we're still, not much has really changed. Momentum backed off a little bit from that extreme range. When we had a little bit of that sell-off last week, breadth is still in the extreme range, although it could become more extreme. It could move to the far right side of that. So nothing's indicating extreme overbought conditions just yet. And the sentiment is in the high range and getting pretty close to extreme. Excuse me, I'm got the seasonal allergies, so I'll probably be drinking a lot of water here to keep my throat clear here. But it's it, as I mentioned a few times before, as soon as sentiment becomes high, especially gets to the right side of that high range, you have to be concerned. It means that complacency is in the market, and now usually you don't always get all three of these indicators in the extreme range when you're real close to a bigger correction. If sentiment is in the high range, and you've got breadth and momentum in the extreme range, you're getting pretty close to a pretty decent correction or market pullback. But since we don't have, well, we do have the breadth in the extreme range, but momentum is still a little ways away. There's still room for things to kind of rally a little bit. And the way the charts are looking right now, with it moving, the market moving more sideways over the last week and a half, it's acting like it wants to maybe have another push higher before correcting. And this would kind of line up with a very common seasonal theme with the markets, which is that the markets tend to a lot of times rally into the end of April. And there are a lot of corrections that have tended to happen in May. In fact, it's happened enough times that there's and you're going to hear this on CNBC every year. You hear this, the sell in May and go away kind of phrase that everyone starts talking about. I've already started to hear it. I'm not a big fan of these phrases. They're catchy, they rhyme, but they can be dangerous because people think that just because there's a phrase that the market has to do something, and we never want to have anything take our focus off of what is actually going on, what we're actually seeing on the charts. But with the conditions lining up, with being in an overbought market condition, seeing the buying starting to just really dry up, you got to realize that in order to push this market higher, you've got to have new buyers coming in to push things higher. If nobody is buying, it doesn't mean that they're selling yet, but if nobody is buying, the prices still have to come down. It's the buying that just kind of holds it there and pushes it higher. And so when you start to see these days where, and we'll look at the chart here in a second, where we see the market rallying, but it's rallying on really, really light volume, that you have to be a little bit concerned that where there's not a lot of new buyers coming in. Now that can change. If there's a reason to buy, that if something comes out and triggers a reason to buy more, to buy aggressively here, then the market can push higher. But when you're in these conditions, what you really are afraid of is a bearish triggers, a reason to sell, because it tells you that most buyers are already in the market and they're waiting for a reason to take profits or to prevent losses. In other words, a reason to sell. And I thought we had that trigger last week when the capital gains news came out, but the market reversed right off that. Like I said, I'll show you that when we get to the chart here. But real quickly here, let's take a look at buy-sell ratios. They're starting to get a little wide here. Here's the buys versus the sells. But again, we've seen they can get pretty wide. But we've also seen them whipsaw a lot through here. So I wouldn't categorize this as extreme just yet. And I don't see anything in that would indicate any sort of reversal either. So not much. We're not gathering much information from that chart just yet, except to say that it's just telling us that the current trend, the current trend still looks okay. Sentiment is backed off of the extreme range, which it was at a couple weeks ago. Now let's go look at the charts here. So here's the big whipsaw that we had last week. We had that bullish reversal on Wednesday. The market looked like it was starting to drop, and then we had this strong bullish reversal. Looked like it was going to go roaring right back. In fact, what was interesting about that is we started to see money flow into small cap stocks again, and that was it was kind of a risk on type move again, which would definitely be something I would look for to push the market higher. And then the next day was that capital gains news that came out, and we had the bearish reversal day right here. And I thought for sure, off of that, having that strong bullish reversal and immediately a bearish reversal, I really thought that was going to trigger the selling. That was definitely a reason to sell. There's definitely some concern there about higher capital gains taxes cutting into the profits of the different corporations, and so. But then the market shook it off. We had the bullish reversal day on Friday. But you can see the last couple of days, we're just kind of stuck right here. We're stuck at a new all-time high, or right at a new all-time high. We put the volume bars up here. You can see how volume is dried up. That was another reason we had that bearish reversal on higher volume, had a spike in volume. But that's a lesson too, and it's just something you have to just get used to. Is that there are things that can happen in the market where you look at it, you say, man, there's a high probability this market is going up or going down. That bearish reversal that happened last Thursday, there was a very strong probability that we were going lower. In fact, I took on several bearish positions, trades, to try to take advantage of that move. But we reversed right back, and then that can happen. The lower probability outcome will happen from time to time, and so you just you can't get too upset about that, because it's going to happen often enough to where you'll drive yourself crazy worrying about it. But it's one of those things that humbles you. You're reminded constantly that you cannot know exactly what the market is going to do, no matter how long you do this, how many hours you put into your analysis. But again, as trend traders, you have to get used to that, because our objective is not to be psychics. Our objective is to just recognize what's going on, recognize the trend, and keep trading the trend. And so the way it shook that off, and the way it's been kind of moving sideways through here, you hear me talk about whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. it would indicate there's probably a stronger chance that that we end up breaking out eventually too, because it could mean that we stay sideways for a little while. We could move back down to the lower part of this range here, and you could stay like that for a while, but eventually we should end up breaking out. The reason why I point that out is that usually you're not going to see a move sideways like this and then get a big drop off of that. It can happen, but I've talked about these before, that those tend to be what I call volcano tops, which are rare. They don't usually happen. Usually there's going to be a little bit of a point to it. Even on this pullback right here, there's a little bit of a point to that reversal. Here it tended to move down sharply. I guess you could point to this right here where it moved a little bit sideways and dropped down and then rebounded. But that was even a real shallow type correction right there. You typically out of this, you'll push higher. Now it could just push higher barely and then reverse, but it's acting like we should get at least one move higher. But the key thing here I want to point out is to look at the volume. See how the volume has declined. Very light volume yesterday and today. Let me move the chart up a little bit. We can see today's volume. You can see today's volume looks like it's going to be lighter than yesterday, at least as of right now. That could maybe change a little bit, but it's just so what that's telling me is that, again, you kind of got the peak of the buying. And another thing that happened yesterday, that a little bit of a warning sign, is that we had a day where the S&P 500 was up and the VIX was up. You always hear me talk about this, that pay attention if the VIX and the market are moving in the same direction. What that's telling me is that professional traders don't fully trust the trend right now. They're still trading it. They're still buying. They're not panicking, but they're also buying protection. So they're buying stocks, but also starting to buy some of those protective puts to protect against a potential sell-off. And again, that action, it's subtle, but it tells me that they're not fully trusting the trend, because they're not going to spend that money on those protective puts if they don't think they need it. Believe me. And so if they believe that they should start to buy some protection here, even though they're still buying stocks, that's usually a behavior near a market top. And then just the sentiment in general. I mean, you don't hear too many people out there talking about the market selling off in any significant way. So again, the trend is still up, but we're still in that kind of warning area. So we want to be a little bit cautious here. It's not a bad idea to sit tight and sit on the sidelines even in these types of conditions. I don't see anything that's saying to short. So I think that's important, that just because the market is acting like a top or acting like it could reverse doesn't mean that there's a strong signal to short yet. So it's kind of in limbo. It's you don't want to be aggressively buying in these conditions. You definitely don't want to be shorting just yet. Now you go back last week, you say, well, Jerry, you were shorting last week. Well, I was shorting off of a pattern. I was shorting off of that bearish reversal after the bullish reversal, higher volume, and a big news story, a trigger, the possible trigger there. And even at that, I probably could have waited another day to get I should have gone in a little bit more tepid and then got more aggressive with confirmation, meaning if it started to move lower, then get more aggressive. It's hard to do that though when you're shorting, because if you've shorted before, you know that stocks will fall a lot faster than they rise. And so you can't get too much confirmation if you're shorting. You can't wait for too much confirmation or the move is done. Here you have a bearish reversal day. You wait for another day of confirmation. There it is. And you had one more down day and then it reversed. It's like it dropped fast and then it took another, a week or so to get back to where you were before. It rises a lot slower than it drops. These drops tend to be a lot sharper, and so can't wait around for too much confirmation. But you definitely don't want to be shorting without any sort of a, or just trying to guess right here that the market's going to drop. I don't see anything that's saying that that's going to happen real immediately or soon. It could be soon, but I would probably assume that we would break out first before getting that. Let's go to the DIA. Same thing, moving sideways. Qs. Again, you can see the same thing. We're just right at new all-time highs. We can't seem to break out. It's creating more of a sideways pattern there. Now the Russell has been moving up, and you could say, well, you know, the small caps are moving higher, so that's a bullish sign. Yeah, but we're at a spot that's critical. I've talked about this a couple of times. Remember, I said that it looked like the Russell 2000 was creating a little bit of a bearish head and shoulders pattern. And if you remember last week, I very often in a bearish head and shoulders pattern, the left and the right shoulders will end at about the same spot. And for the Russell 2000, that's at about 229, 230, right in this area right here. And we're right there. I mean, it could move up a little bit higher, but we're right there. And you've got, here's your neckline down here where it came back, formed a kind of a double bottom right there. And a lot of times the left shoulder on the head and shoulders pattern will be kind of a bullish ABC pattern, which looks like right here you had an impulsive move up, impulsive move down, and that looks like a bearish ABC pattern right here, which often forms in the right shoulder. So we'll keep an eye on that. And we should probably have a better idea of how that's looking by Thursday's update. We can kind of comment on that. I'm sure I'll probably have something to say on that on Thursday. So again, putting this all together, we've got these clues. Nothing's showing anything just yet, but we also have a week that's the last week of April. There tends to be sell-offs that happen in May. That's kind of lining up, and so we'll kind of keep an eye on that these next couple weeks. See if these clues ended up forecasting something. Okay. All right, let's keep going down the chart here. On bonds, let's take the volume bar off here so we can see this a little bit better. It looks like this rally in bonds is just a correction, maybe a bearish ABC pattern setting up for another move down. One area that we really want to pay attention to is this right here. That was a lower high on the way down here. Lower high, lower low. Now you had a little bit of a lower high right here, a quick little move right there. We did break above that on this day right here, and it pulled back and had a higher. So we've got higher lows and higher highs right here. So if that is a higher low, then that's going to be a key spot to look for. This is a stronger rally up here that created a lower high, so that's going to be a little bit more significant for me to be more bullish on bonds. I think obviously if we break above this previous high and go to a higher high, that would be confirming the current upward move. It's still in that upward move. But again, we're talking about recognizing clues of a full trend reversal. We're seeing a full trend reversal in bonds. And I don't see that just yet. If we drop and we go below this previous low over here within the next few days, and we might have clarification on this by Thursday. But if it drops below that, it would be likely that this is a correction within the downtrend and that we're heading lower again. particularly if it starts to accelerate. Remember, corrective patterns tend to be more choppy. Impulsive moves are impulsive. They drop sharply, or in the case of an uptrend, the pullback would be more choppy. When it takes off, it goes. And so if this is a corrected move setting up for another move down, we should see bonds start to drop sharply and not be back and forth. And if it goes below this low right here, it's gone to a lower low. It's kind of broken that little uptrend, that short-term uptrend right there. And by the way, if it does drop from here and goes to a lower low, it would give a slightly lower high right here as well. So that would be a clue that maybe things are starting to roll over and drop. But as of right now, it can go either way. And you never want to be, if you're trading bonds, you never want to be trading either way right here. There's nothing to really confirm a move higher or a move lower. It's kind of in that limbo state, and you just don't want to be guessing. You'd want to have a little bit more confirmation that's acting like one or the other, acting like an uptrend or acting like a downtrend. Gold. Gold's kind of in the same boat here. We're wondering if this is just a bearish ABC pattern setting up for another move down, or if this is steadily starting to reverse back up, where you have, you did go to a higher high right here, maybe a slightly higher low right there. I think a key spot here is this previous lower high that happened back in February. These were lower highs and lower lows. I went to a lower low right down there. If it gets back above there, that would be a lot more bullish, especially since it's pulled back a little bit right here. If it rallies back up above there, you've got another higher low. Actually, you got a little bit of a stair step up right through here. If it does go up, you'd be going to a higher high, and you'd be finally going to a breaking that downtrend where you've gone to a high. You've taken out the previous lower high right here that was in place. If it starts dropping, you'd probably have to take out this higher low right here to confirm that this is a bearish ABC pattern. Now you're in a downtrend, and you'd probably need to be doing it quickly. Meaning it'd need to start dropping sharply right here, because that would be, it'd have to show that impulsive move down. So again, gold is in kind of in limbo right here, not really giving us real strong direction just yet. All right, let's look at oil. Oil looks, now the pattern I was thinking was forming on oil. I thought this was going to be wave A right here. This looked like wave B. You're going to get wave C coming down, and then it was going to resume the uptrend. Didn't really kind of play out that way. What I'm seeing on oil right now is a little bit of a triangle. A symmetrical triangle pattern right here. You need to remember when I talked about drawing trend lines I think it was last week I did this. You have to have at least two touches on the line. So here's our first touch. Here's our second touch. It pulled back right here, so it gave us a lower high right here to draw that trend line. You got multiple touches along this line right here. So we're just kind of waiting for a breakout. If we break out to the upside, it's more likely that oil is moving higher. If it breaks to the downside, it's probably going to drop, although it could be that this ends up being wave A, this is wave B, and then if it drops down, that ends up being wave C. but it'd be more likely that's going to drop if it breaks the lower part of that trend line. Another, maybe having a little bit more confirmation, you could use this high right here and this low right here. If we break below this low, it's probably going lower. If we break above this high, it's probably going higher. But notice how everything's kind of in limbo, right? I mean, we just got done going through the index charts, and they're just kind of moving sideways. Not real strong clarification of direction. And then all these others are showing the same thing, that they could go either way. And so, you start to see things like this. This is why we do the analysis. You start to see things like this, and these are red flags that you shouldn't be doing a heck of a whole lot in these types of conditions. Because you're most likely guessing at that point or reacting to some other some other preconceived outlook. You're trying to force what you want onto the market. Market's saying, I don't know what I want to do yet, and you're trying to say you're gonna be bullish right here. You're going higher. I know you're going higher. And it's real easy to do that. Our own biases take over, and we try to make the market do what we want it to do instead of recognizing what it's telling us. And that's why this whole process is so important to kind of go through. That's why we do it each week. Go through the same process. It might get boring after a while. We're going through the same process, but the software is set up to remove as many biases as it can, and kind of force us to look at what's actually going on. And that's what keeps us from getting off track. Because again, trend trading is hard. It seems simple, just follow the trend. But human nature doesn't allow us to just follow the trend. It wants to impose all these biases. We always want to be smart. We always want to look smart. And the way we look smart is making a prediction and having it work out. And, there's an old saying that says you can either be right or you can make money. And I love that saying because it's so true in the market. There's so many, there are people that come into the market that they think they want to make money, but really they want to be smarter than everyone else. They want to be able to tell all their friends that they bought this stock and they made this amount of money, and it makes them look smart. And they want to be right. They want to be right more than they really want to make money. And there's others that could care less about, what other people think. They just purely want to make the money. They don't care if the stock is going up or down. They just want to make sure that they're on the right track, that it's up, they're trading it up. If it's down, they're trading it down. And this software is what helps us to kind of stay on track that way, to eliminate some of those biases that creep in. The dollar, see, this is what I'm talking about with an impulsive move down. So we talked about this possibly being a correction within the downtrend. Wave A, wave B, wave C. If that's the case, then the dollar should be moving sharply down, and that's what it's been doing. And it should continue. It should actually take out that low eventually and break below that. Now, within the downtrend, you can have these little bounces here or there. You can be, this is a larger stair step down that we're looking at. And within that larger stair step, you can have these smaller stair steps as well that take place. Yeah, this will move down. It moved up a little bit right there, move down, move up a little bit right here. So it still can kind of stair step a little bit, but ultimately it should be trending lower. What kind of confirmed that? Well, again, on this rally up right here, we had higher highs, higher lows. As we pointed out in the previous update, I said if it can break to a lower low right here, that would confirm that you're in a downtrend, that you're heading lower on the dollar, and that's what we're seeing. And again, the impulsive look to it, it's just moving straight down. It's not moving sideways there. So we expect the dollar to continue to trend lower. Here's the VIX. Again, the VIX is, you can see where it spiked up. It dropped dramatically on that bullish reversal on Wednesday, spiked up pretty decent on that bearish reversal on Thursday. And that, again, you get all those things lining up where you get what you think is the trigger, bearish reversal, higher volume, VIX spiking. Those are all things that typically will lead to a move lower, and the market just shook it off and it's come back down. The VIX has come back down. But again, a lot of times in market tops, you'll get that too, where you'll get, I think what that news item showed us last week, even though the market shook it off, what it showed us is it showed us that the market is itchy. It's itchy to sell, right? As soon as there's some bad news, it reacted. Now again, it reversed. So what happens there? Well, it reverses. Those dip buyers get even more confident. They think this market is never going to drop again. And they're buying any dip, any sell-off they're going to buy in. Well, that's what creates the panic eventually, because you get the trigger, market sells off, it causes that fear that starts to come in. Those dip buyers get burned. They buy again because they're so convinced it's going to go up. And not only are they convinced it's going to go up, but they want to make up for their losses for buying the first drop. And they start getting wiped out. Then it really creates panic. And then when you get the institutions then feeling it's time to sell as well, you get sharp selling that comes in pretty quickly. And so I think the key thing to recognize, if you've got positions already in place, and you're saying to yourself, okay, Jerry's talking about a possible sell-off here. I'll just wait until I see it start selling off, and then I'll start selling. The problem sometimes is that by the time you recognize that it's a stronger sell-off, like I said, it can drop so quickly. So a lot of times in these conditions, some of the decisions I would make is, again, you don't want to just get out of because if we trend high, continue to trend higher, we can continue to grind higher. But it's a good time to tighten up your stops, reduce exposure, not have as many trades going on. If there are some that are starting to drop a little bit, even though the market hasn't dropped a little bit here, go ahead and take profits off the table. Go ahead and move some of that to the sideline so you don't get burned too bad once a pullback starts to happen. All right. Let's go over a couple of stocks here real quick. I want to go back to a couple that I pointed out last week in the retail sector. I'm going to go into the buy section right here because they've gone to a buy signal. But Kirtland's is one that we brought up in the recently. Let's flip these over to signals here. Went back to a buy signal yesterday. Now, remember on this one I said, especially in these market conditions, you could just wait to see if it breaks out. There's a little bit of extra confirmation that may not be a bad idea. But that's flipped over to a buy signal there. And then the chart I really liked was Big 5, BGFV here. And that did end up breaking out. Broke out on Friday, pulled back a little bit yesterday, but it's kind of reversed back up, all right at that breakout area there, so that's a good sign. Now the rule of thumb on these again is you have a little bit of a triangle formation here, so you can take kind of the base of the triangle, which would be, I'm going to use this move right here. So again, if you're drawing a triangle, this is the base of the triangle right here. Now this is a triangle tipped over. There's the pointy part. Here's the base right here. You take the base of that and project it from the breakout area. There's a breakout area. So it gives you kind of a minimum target to shoot for. Now, as I say many times, it doesn't mean it has to get there. It doesn't mean it has to stop when it gets there. It can keep going higher, but it gives you a little bit of confidence in to be able to be patient to let it get to that kind of that minimum area, because in most cases it should get to that point when it breaks out. So that tends to be pretty helpful. All right, let's go under, I think one we put up last week on under the construction sector was this USCR. I think I went over this one. It has a 90 strength rank, but a lot of the construction companies are in that lower 90 range, not quite that 98 strength rank. What I like about this is just the chart behavior here. Here we broke out on an impulsive move, went straight up right there, higher high. There's a higher high, higher low. And then when it pulled back, this is more kind of choppy. So it kind of looks like an A, B, C type pullback, although it's a little bit of a deeper pullback. It's kind of moved up off of that, so it looks like it's created a little bit of a higher low right there. Waiting for this to go back to a buy signal. And it's probably pretty close. Yeah, it's right in the kind of the midpoint of that hold range. This one kind of also fits into the the administration's infrastructure bill. That could fit into that if that kind of goes through. There could be money flowing into some of these infrastructure type stocks. All right, let's do one more here. I need to get into the training. Industrial products. Oh, excuse me, that's basic materials here. SPLL, 98 strength rank. Again, you have a little bit of a triangle type formation here forming. It looks like it might go to a buy signal today. I'd probably wait for it to break out of that triangle first, though. But a little bit of, we call these pennant patterns, or you can, if they're more sideways, they'd be flag patterns. But here's the flagpole. You ever been to a baseball game? You see the pennants that are flying there. All right. Training for today is using the ST trend. Now, to find the ST trend, if you go under this box right here where we flip from candlesticks to signals, right in the middle is the ST trend. Now, this is a very short-term indicator. It goes green to buy, red to sell. Now, there's a lot of people, usually they're new traders, that when they kind of discover this, they think that they just discover the easiest way to trade. They just buy when it goes green and sell when it turns red. But as with any short-term indicator, you're going to get a lot of whipsaws if you were to do that. You'd probably end up broke just trading short-term signals without any sort of a process behind it. So I think in starting this training, it's very critical that we are not using the ST trend alone to make our buy-sell decisions. We want to have a chart pattern, a trend, a chart pattern, even a candle formation to tell us that stock is more likely to go up. And then we're going to use the ST trend as a quicker signal to enter that pattern. Okay. If you look right here on this stock, for instance, the ST trend shifted right here. If we flip it back to signals, it's barely turning to a buy signal today. So the ST trend shifted right here. Here's where the buy signal comes out. So, you know, the buy signal algorithm is incorporating a little bit more confirmation into that signal. Okay, and the signal, any of the signals are designed to just make it simple for someone that doesn't want to learn about chart patterns, doesn't want to learn about ABC patterns. What we're going to do is we're going to say, okay, if you're willing to learn how to recognize trends, recognize charts, then could we find a signal that's a little bit where we can enter the trade a little bit sooner, make a little bit extra money because we know how to manage it. So just to draw it out, what I want to look for in general is an uptrend, and then a pullback within that uptrend, and preferably an ABC pullback where it kind of moves back and forth a little bit, or even doesn't have to be a clear A, B, and C. It could just be a choppy move down where it looks corrected. Okay. And usually in that wave C, the short-term trend is going to go red. And then what I'm looking for is when that wave C is done, it goes from the short-term trend down. I mean, the red means down, so go down. And I want to see it go from down to up. And that could be an early buy signal. But again, notice I'm not just going off of the signal. It's the whole context of everything. You have your uptrend, you have your pullback, you get that first little buy signal. Now you can use this on, a lot of times what I'll do is I'll use this with the preset scans, preferably, you know, the ones I like. You've got your muscle stock scans. My favorite are muscle stock and smooth sailing. I like smooth sailing because a lot of these stocks, one of the criteria is that these are larger stocks. So there tends to be options available on them. So if I want to trade and the option liquidity would tend to be a little bit better. So if I want to trade the stock, I could trade the stock. If I want to trade the option, I could trade the option. But these are stocks that are outperforming everything else. Now, I guess I got to hesitate in today's class a little bit here because remember the context here. We just got done saying that the market is acting like it's at a market top. We don't want to be entering in too many trades right here. What would be ideal is if we get a decent pullback in the market, and then you start to implement some of these strategies you're learning today. They'll work pretty well for you. But the danger here is that you're learning. You know, you're learning something and then you want to go out and apply it. And I'm afraid that people are going to run out there and start buying a bunch of these stocks off of what we're going over today. And then we get a market pullback and they get burned pretty good. So, you know, it'd be a good time to practice trade some of the stuff. But don't jump out there and do a whole bunch of real trades here. But you can see the muscle stocks are designed to get the highest, these high strength ranked stocks. I'm going to skim down here. Well, first of all, let's skim down here. I'm going to go to this CMBM right here. CMBM Networks Corp, 98 strength rank. And we're going to switch this ST trend on here. So again, you've got your larger uptrend right here. Look back. We're going to look back at the past on some of these. Here was kind of what looked like wave A, wave B, wave C. Within that wave C, it went to the ST trend down. And then you'd look for well, first of all, you also want to make sure it's still holding that higher high, higher low, that stair step. It's not violating that stair step. Went back here, the ST trend moved up. So that could be your entry, recognizing this pullback right here. That could be your entry into the trade. Now, the way I do it is that I will usually put a stop right below what I think is the end of the pullback, the end of wave C right here. Because if this thing, it goes, the short-term trend starts to turn up and then it rolls over, which it will. You'll have some that the short-term trend looks like it's up, it looks like that uptrend is going to continue, and then it rolls right back over. You want to know when you're wrong, when that's wrong. And when it would be wrong is if it goes below, goes to a lower low right there, goes below that low right there. And sometimes it could be, sometimes you don't get the pure ABC pattern. It could be wave A, wave B, wave C. Starts to move up, the ST trend turns up, you had your stop below here, and as one more drop, stops you out, and then it takes off. That's going to happen, but that's why you put that stop in there, is that even if that does happen, you don't lose very much, and then if it does rebound and start to move, you could always jump back in and still capture the trend, capture the move. Okay. Here it went impulsive, broke out to new high. You're recognizing that as it's breaking out to a higher high right there, it's confirming the uptrend. Here on the pullback right here, this looks like wave A, wave B, wave C. Went to a ST trend down. ST trend a couple days ago went back up. Stop below that previous low right there. So that's where you know you'd be wrong, and you're expecting that stock to continue higher. Let's look at another one on the muscle stocks. Oops. BXC right here, Blue Links Holdings. Here is a pullback. It looked like an ABC pullback right here. Here's where the ST trend went from down to up. That would have been the entry signal. Stop down below this low. And you see it went back to the ST trend down, and that can happen. That's why we're not just trading the ST trend. We're using the ST trend from down to up as a entry signal off of an ABC pattern. So it wouldn't have bounced me out of the trade there on this little pullback, and then it ended up moving higher right there. And this is where you can, if it moved higher like this, broke out, this is where you could move your stop. I could move my stop up to this low right here. If it moved up eventually up and then it dropped and went to a lower low, again, if it goes that lower low, that's a warning signal that the trend could be reversing. Here it had a little bit of a dip right here. I prefer, like I said, I prefer to have the ABC move to it, but you can do this on just a one move down, where it moves down and starts to move back up, goes from ST trend down, ST trend up. The problem is, though, is that because ABC patterns form a lot of times, there's a good chance if you're putting your stop below that low that it's going to come back down in wave C and stop you out. And if you're okay with that, then you could re-enter again if it does have a wave C and then goes from short-term trend down to short-term trend up. You could re-enter, put your stop below that low, and hopefully capture the move on that next move. So it'd be kind of like here you have the drop right here, but to ST trend up, you could have entered the trade on that pullback, put your stop below here. But this could happen. It started to move higher, came all the way down, stopped you out, moved up again, ST trend up. You said, well, that looks like an ABC then. I kind of got stopped out trying to trade wave A. You could get back in, put your stop down below here, and that ended up working out for you. Up here, again, I had that just a quick move down right here. ST trend went down, then it went back up. If you were just trading that pullback right there, you could have entered on this ST trend up, put your stop below here, knowing that it's possible it could come back down and stop you out in an ABC pattern. But in this case, it didn't. It just went straight up. And we're always experts in hindsight, I know, but sometimes it's best to learn in hindsight to see what you're looking for, and then it's easier to trade in real time then. I also like, again, the smooth sailing stocks. Hold on just a second. Like I said, these tend to have a little bit more volume, so that their options are available. Usually there's options available on them. Now, you say, well, Jerry, all these stocks we're looking at, they've already gone from short-term trend down to short-term trend up. How do I find ones that are just moving and back up again? Well, this is where you can use your screener right here. Now pay attention here, because when you click on screener, we want to pull up the screen criteria to put in our own screen criteria. Okay, and a lot of times people forget where that is. You're gonna click right here on stock screener. So you're gonna click on the tab screener up here, and then you're gonna click on stock screener right here, and that's going to pull up the criteria page where we can enter in our own scan criteria. Now, as I taught when I taught about using the screening tool a few months ago, you want to start with fewer criteria, and then you can add more, because what happens sometimes is if you try to scan for the perfect stock, so to speak, you end up not finding anything, or you get one or two stocks, and even at that, they're not going to always be the perfect stock. So we want to kind of highlight a couple key criteria. Now, one I like to use is I like to have a little bit higher volume, because I like the option of being able to buy options. So usually I'll put that at about 500,000 shares at a minimum. I may even bump, if I get a lot of stocks, I may bump that up to 1 million shares or something, because then at 1 million shares, you're dealing with stocks that not only have options most of the time, but the option liquidity is going to be pretty good, meaning you're not going to have really wide bid-ask spreads. And when you go to buy that option, you're not the only one that's buying the option, that kind of stuff that can be can get you into trouble. But that starting with 500,000 on volume is usually a pretty good one there. I don't care about any of the fundamentals on my trade, so I don't look at any of this stuff right here, but it's there in case you do want to add some of that stuff in. I usually come right back down here, and now I'm not worried about the signals, because remember, I'm not looking to buy on the buy signal, so I'm just going to eliminate signals right here. I want to look at ST trend, and I want to use ST trend change from down to up. So what stocks are going from a short-term trend down to short-term trend up? Now, I could leave it at that, just because I know the market right now is a bull market. We're in these a lot of stocks are in these longer-term trends, but you could also add in there you want the long-term trend up. Okay, so let's look at what I'm doing right here with these things right here. I'm looking for a long-term trend up, but I'm also looking for the short-term trend going from down to up. Now, in order to go from down to up, you have to have had a pullback. You have to have been in this long-term trend and had a move down to go to the short-term trend down. And then to have it go from short-term trend down to short-term trend up, that's what I'm looking for. I'm looking for this longer-term trend that's had a recent pullback and has gone from short-term trend down to short-term trend up. Now, what the scan can't do is tell me in this pullback is there an ABC pattern that's formed in here? All it's saying is that the stock has pulled back within that larger uptrend. So, but I could do that. I just need the scan to give me a set of stocks that I really want to be interested in. I'll go look at them to see if they have that kind of ABC pullback to them. Or maybe I do want to just trade it on one pullback. You know, I have that option to be able to do that as well. Okay. And then I also want to be dealing with the stronger stocks. So let's leave in that strength rank, 95 to 100. I can adjust that though. I can bring that down to 90 to 100 to allow more opportunities. We can play with some of these a little bit if we're not getting enough stocks within the scan. All right, let's hit find stocks. Let's see what we get off of this. Now I'm going to come down the list a little bit because I've already kind of gone through some of these before class, but I'm going to come down to SUNW here, Sunworks. You have this larger move up right here. You have what looks like it could be a larger correction back down. And it's recently, yesterday. Now, a lot of these are going to be, because they update overnight, it means that yesterday it went from down to up. Short-term trend went from down to up. Okay. But here, and you know, today it's actually pulled back a little bit. So it's basically right where it was at, where it closed yesterday. So that could be your entry signal. You put a stop below that previous low right here. This stop would be really significant because it also lines up with this low down here. If it breaks below that, you'd probably want to be out. Now keep in mind, you know, this looked like an ABC pattern on the Sunworks back here. Went from down to up, and it started to move up, and then it drifted sideways here, did go to a higher high, had a higher low right here, and then it broke down. Hasn't gone below this low yet, but you know, I don't want you to going into this thinking, oh boy, all these stocks are just going to go straight up, especially in these type of conditions we're in right now. You have to be a little bit careful with but see, that's why I want a market sell-off here soon, because you get that market sell-off, you get new buyers that are going to be coming in at that point, and you get some of these stocks that pull back a little bit deeper. And if they pull back in that ABC pattern, those are the ones that really take off once that pullback in the market is, the market's moving higher. That's when these tend to move higher, and those are higher probability trades. So that's why I keep cautioning everybody to kind of wait a little bit here. Let's go back to our screener. Here's a better one that I liked, was FUTU Holdings. Now this one had the buy signal, the ST trend down, ST trend from down to up yesterday. It's back down to down again today, so keep that in mind. But you might want to wait for that to go back to up again. But if it does, this would be your previous low right here. Now, what I like out of this one is you've got a inverse head and shoulders, possible inverse head and shoulders pattern right here. There's your neckline. I love trading. These are one of my favorite bullish patterns to trade. But that's a good stop right there, because if it does come back down, usually your left and right shoulders will end at about the same spot, which is what we have right here. And if it drops below that, maybe this isn't an inverse head and shoulders pattern at that point, and you don't want to be in this thing. But That's kind of what jumped out to me. All right, so anyway, so that gives you, as you can tell, this takes a little bit more time. I'm going to be going through these lists, and it's going to take a little bit more time to find that stock I'm looking for. I'll tell you what, though, there'll be a lot of good ones in the scan when you get a market pullback. You'll probably have more than you can trade at that point. But is it simpler just to go and go to your sector tab, look at the highest trading sectors, look for the highest trading stocks in those sectors, what we do each week? Yes, it's a lot simpler to go through that process. But you miss a lot of trades out there as well that could be great trades. I like this system personally. I like this system using ST Trend for option trades because I don't need a lot of confirmation to get in those trades. And I'm just looking to get a quick move out of them where I get in, get out, and I'm using the leverage of the option where I can make good money off the leverage of the option. But that's a little, options can be a little tricky if you don't know what you're doing. I got to emphasize, you got to make sure you're using it in conjunction with the overall trend and the ABC pattern and things like that. You can also, what's also very helpful is combining it with candlestick formations as well. If I get a let me get my drawing tool on here. If I have an ISO ABC and you it's been dropping, you get a bullish reversal candle, and in that bullish reversal candle, it goes from ST trend down to ST trend up. I mean, as many things you can line up, probabilities you can line up for that trade to work out, the better. But there's a lot of things you can add to this. But it's just another option to use for those that want to use the different tools that are available. And actually, today's training was on a couple things. It was on using the ST trend. It was also on the screener, using the screener more effectively. And the bottom line with the screener is just go in and start playing around with it a little bit. It doesn't. You don't have to have the perfect scam, but just get familiar with the different options there, and have some fun with it. Real quickly here, just a second. I had a question. On how can you review the recordings of these classes. If you click on this little tab right here, you'll see a choice that says Learning Center. Right here. And that's where the recordings are posted. If you don't have access to the Learning Center, you'll probably have to contact the office and they can help you get set up with that. But that's where you can find that. We just started a Google, or not a YouTube channel. So go to YouTube and type in Traders Pro. You'll get access to these updates. You can review these updates and these trainings on there as well. So that might be a simpler approach to use. All right, thanks everyone. Have a great week. We'll see you on Thursday for the next update. Bye now.